want to start the conversation today with Ajay, Bagga, market expert, and of course, Edward Yardeni, President Yardeni Research. Welcome to both of you. Mr. Yardeni, just your comment on what the finance minister told us at our event from the perspective of foreign flows into India. And we always talk about it in the context of valuations, other factors that foreign investors could look at. But this thought that maybe there's more to it, and sometimes there are geopolitical factors as well. Just your comments on that.
Well, it seems to me that things are improving rather rapidly for India in terms of its relative position in the global economy. It is the most rapidly growing economy in the world. It is obviously one of the leading emerging markets in the world. And I think now with this trade deal with the European Union and now with the United States, India is in a particularly good shape. And I think you're just going to continue to see a tremendous amount of onshoring with investments leaving China and going to India. And that should be a very big positive. So I think the outlook for the Indian economy is actually improved a lot, as well as for the Indian stock market.
Ajay, comment on that, because there is a point where Finance Minister Sitharaman at the event talks about factors extraneous to fundamentals that are leading to certain large funds deciding whether to invest or not to invest. In this case, not to invest, despite fundamentals heading in the right direction. What do you make of that?
Yeah, there is a possibility, but what Rahul Kanwal was saying is a reality in terms of the AI trade. If you look at the Korean market performance last year, it was largely Samsung and SK Hynix. If you look at the flows that went into China, they largely went into the Chinese AI plays. So we don't have a pure play AI. That has been an issue for emerging market flows coming into India incrementally. And what the finance minister said, we respect that. That is a possibility that some of the state actors chose not to put in incremental funds because of the relations with the Indian government. It is a possibility. If the finance minister is saying that, probably there is an iota of truth in that.
Mr. Bagga, Dr. Yardeni, good morning and good evening respectively. Dr. Yardeni, the thing about today's market open, and there are two factors out here. One, that if everybody was waiting for the details of the India-US trade deal to be out, they were out in a matter of 4 days, and therefore that should spur the sentiment on India. And not that it wasn't good last week, but still there was volatility. But there is also this added piece of the Japanese election verdict and what it might do for emerging markets in general, right? You reckon that it's a combination of two things that could have done this slight uptick, or actually a fairly strong uptick that we are expecting in Indian markets today? And can that continue now that the details of the India-US trade deal are visible?
Well, that's just details of an agreement, and now it has to be implemented. So the fundamentals are still ahead. I mean, the market can start anticipate what the deal will actually mean, but the market isn't going to completely discount the reality of this deal, which is likely to be very, very good for the Indian economy and the Indian stock market. With regards to Japan's election, I think the bottom line is we have now the developed world, the so-called developed world, the United States, Japan, Europe, have rather significant stimulus programs in place now in both fiscal and monetary policy. That should be good for the global economy. That should be good for emerging markets, should be very good for India.
Ajay, just trying to understand on the trade deal, because we've now all seen the details, we got clarifications as well. Is this turning out to be better than anticipated for the markets? Because you saw a bump up the day the deal was announced, and after that some concerns coming in. There is a bit of a question mark on what we're doing with Russian oil as well. All things considered, do you think that this is now a positive for India?
It is a positive, Tamanna. If you're not at the table, you're on the menu. That was the clear the punitive tariffs were a clear pointer to that. We were singled out for that 25% tariffs on Russian oil. That has been removed. The media reports are that Indian refiners are not directly buying Russian oil. So China benefits to that extent in terms of lower oil prices, but it's not that big a deal. Big thing, I think, what the market was spooked about was the $500 billion that Trump casually mentioned. We didn't know how many years, what goods, what is what is the operationalization. That clarity came that it's over 5 years and includes all goods, including GPUs, semiconductors, everything. So we might have a Boeing order itself of $80 billion, and incrementally it comes to about 50 billion more of energy to edible oils to semiconductors to aeroplanes every year, which is not that big an issue. You will have to divert some imports out of other countries if the US can supply those. So compliance should be fairly easy to do on that part going ahead, and that helps the market. So I think it's a tailwind. And leave aside the political discourse that happens in every country. We have seen that in Korea, we've seen that in Japan. But ultimately, the people vote for certainty. Markets like certainty, and it's a tailwind. The framework that's emerged is definitely a tailwind for the Indian markets.
All right. On that note, Dr. Yardeni, Ajay, thanks so much for joining us this morning. Absolute pleasure having you as always.